Do you really know where the market's going, or are you just guessing? There's a massive difference between traders who predict accurately and those who gamble. And today, we're uncovering why disciplined belief systems lead to better profits, even during volatile times like Alphabet's recent rebound. Let's set the stage. Alphabet drops 16% after earnings. You're watching the stock like a hawk. The question isn't just what happens next. It's how accurate are your beliefs about what happens next? This is what separates winners from losers. Here's the truth. Accurate forecasting isn't magic. It's a skill built through data, practice, and self-discipline. Look at investors who anticipated Alphabet's recovery. They weren't guessing. They were analyzing revenues, future growth potential, and how the market has behaved in similar situations. They trusted their research, placed their trades, and won big. But what happens if your beliefs are shaky or unfounded? You fall into traps like selling too early or holding on too long. Traders driven by hunches rather than data are usually the ones who panic or overreact during volatile times. And unfortunately, they lose money. So how do you develop accuracy in your market beliefs? Here's the framework experts use. 1. Start with historical data. Understand how markets have reacted to similar news or price shocks in the past. Patterns don't repeat, but they often rhyme. 2. Build conviction. Accurate traders trust their systems because they've tested them hundreds of times on historical data. This allows them to stay steady even during high-stress moments. 3. Watch the macro view. Alphabet's drop wasn't just about earnings, it was also about broader market conditions. Disciplined traders integrate these factors into their beliefs. Now, imagine you had predicted Alphabet's rebound. When everyone else was panicking and dumping shares, you were confidently stepping in based on concrete analysis. Your belief wasn't a gamble. It was measured and precise. And here's why accurate beliefs often translate to profits. They prevent you from acting impulsively. Many traders lose money simply because they're reacting emotionally, not logically. The ones who anticipate with clarity stick to their strategy instead of following the herd. So here's the question worth asking yourself. Are your market beliefs backed by facts, or are you just guessing in the heat of the moment? Think about it. What if, instead of reacting, you had a system in place that helped you predict market moves with more precision? The road to profitable trading isn't easy, but it starts with tightening up your beliefs. Stick to the data. Stick to logic, and stay one step ahead. Follow now if you're ready to elevate your trading strategy to the next level. Join the Crowd, a free weekly newsletter to help you trade with the professionals.